Good morning, traders and investors. Are you guys excited to dive on into pre-market prep, where you get all the information you guys need to get your market day started? Let's dive into today's show. We're going to talk about, of course, is this a new bull market? We'll take a look at Wall Street's bets. Back at it, baby. We'll take a look. CPI data, traders this week. What are they looking at? The Fed outlook, of course. We'll talk a little bit about the climate bill. We got Buffett, Berkshire Hathaway operating earnings coming on out. We'll take a look at that. Palantir earnings, Tyson Food, and of course, we got our guest. It's Market Structure Monday. Tim Quast will be joining us at 8:35. Let's dive in today's show, and welcome to Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's go ahead. Let's bring on the guys. Joel Elconin, Dennis Dick. How we doing, guys?
What's up?
How was the weekend first? Good weekend? Slow weekend?
Little rest and relaxation, some swimming. What about you, Triple D? I know you're busier than all get out, man.
House.
Just doing stuff.
Almost done, Dennis.
I'm supposed to be moving in 2 weeks, but countertops just got delayed a little bit further, so we're going to be the end of the month. Hey. I've given my notice here for where I was renting, so I need to be out and be homeless here, Mitch. I'm going to be homeless here.
Hey, no worries, man.
I'll be
coming
to live with you guys.
The RV trader.
What about your boat? Can you stay on your boat for a couple days?
Yeah, right? A little boat day.
That wouldn't be that much fun. No. So we got to get in there.
Let's dive on in. What happened in the futures action overnight, Joel?
Well, we had a little dip off the open, but buy the dippers came in. I want to talk about Friday a little bit before, when after I run these down. But knocking on the door, last week's high, we're up 23 and a quarter, 41.70. We got crude going in the right direction. That's actually staying in the 80 handle, down 65 cents at 88.36. They're liking gold, up 950 at 1,800.70. Silver back over 20, up 42 cents at 20.27. Bitcoin moving off that 20K really nicely, up 12.95 at 24.255. And Ethereum futures, they're up $109.50 at 17.9550. Just going back to the jobs number, right? I mean, I look at it a couple ways. I think someone in the chat made a good point. A lot of summer hiring going on, right? July, right? Kids back from college, kids out of high school, right? So I don't think that. I mean, the number was hot, I guess, and so that's a bad thing. But also, I think what the market thought was, well, we're not going into a recession. Yeah, we may have higher interest rates, but we said in what I've been trying to, stick with is like, yeah, maybe we're going into recession, but man, I just don't see the signs yet. So the market thought about it over the weekend. Nothing happened on the macro front. And here we are, up at the highs from last week. What do you think, Triple D?
That's the main thing, is that not much is happening with China. They're doing some more drills. There's nothing serious happened there. And I think maybe the way to play this market is just stay long until the major headline comes from China. It's going to drop a big one. It's going to drop a doozy eventually. But drills, sanctions, those aren't doozies. Something that's, serious would be like invasion or something more to the point of invasion. Or like I said, something to the supply chain. A doozy will come. But I mean, you can't argue with the tape. And, I've got bearish here in the last week and a half. S&P's really went nowhere, but you can't argue with this. Like, you can see that the risk on environment has accelerated. Even though the S&P hasn't gone anywhere, risk on has accelerated. And we're seeing that in obviously the meme stocks, AMC taking off here once again. Like you were saying, Mitch, is a good segue in their opening segment, is Wall Street bets, Reddit, the apes, they're all back. and they're back with a vengeance here right now. I mean, AMC turned around, key reversal, Joel, off of the earnings. They never stopped buying it all day Friday. They've come in this morning. They've continued to buy the stock. It's now spilled over into the other, short interest stocks that we used to have on that list we talked about. But I mean, Bed Bath & Beyond basically taking off and doubling here in 5 days, Joel, Bed Bath & Beyond. So
yeah, definitely. Before we dive into the chart, I wanted to show us a little of data here from Quiver Quant on Wall Street Bets. It tracks dimensions on Reddit. Of course, you see Triple BBY leading here.
Who's second? It's hard to see.
You got GME and Palantir. Those are the next two that would be kind of mentioned up. And so you can see here about 121 mentions, 830% compared to Triple BY is about 700.
Didn't we go over this before, though?
Like, yeah, we used to go over this.
No. But like, okay. I mean, who do you think are? I mean, it's just not the apes doing this. I mean, the big boys are in on this. Is not.
It's driven by the big boys.
It's driven. It's all about
yeah. It's the rotation. You start to smell it. You start to say, okay, the retail's going, and you're right. Yeah. There's hedge funds coming in here. There's other ones that are coming in to make the money. Like we were saying, it's algorithmic driven as well. So you're right. You're right, Joel.
That's it's retail.
Retail is the catalyst. The Wall Street Bets is the catalyst, and then the momentum traders all just jump in.
Yeah, I mean, you can't miss the party, right? If there's going to be a party.
And I mean, it's hard to argue with this. And this is why I've got to get off this 5-day bear train. I was on the bull train. I've got to get off it. I'm going to go full bearish when I see the major headline drop. That's what I decide over the weekend. There's no sense getting off the bull train here completely. Might as well get back on it. Because I'm fast enough. I feel like I'm fast enough as a trader to get the hell out when the gettins, this is what I do. I get on the turns. The major headline is going to drop from China at some point in time. It's impossible to time that. And if we don't get a major headline from China, we're going to continue to climb this wall of worry, because right now they don't care about higher rates. They do see that the jobs are fine. I mean, I can see McDonald's, like big sign when I drive by my McDonald's, hiring $16 an hour. Like, I mean, okay, yeah, we're in Canadian dollars, but it's serious money. Like when I started McDonald's, or I never worked at McDonald's, but when I was starting to work, it was $6 an hour. Like we've got, a labor issue where people don't want to work as much. So that's the major issue for labor. If you want a job, there's jobs everywhere, and the pay is pretty decent. It sucks, that we're paying more for goods, but the pay is going up as well. So I think the market's just accepted the fact that inflation's going to be here, but we're going to get a little bit more under control. The market does believe, as well as I, that we did peak inflation there last month, and July is going to look, the number when we get here, obviously in August, is going to look better. And I think this bull train continues. So, I mean, as a trader, you've got to admit when you're wrong. For 5 days here, I've been fighting it, saying, well, it's China, something in China. It's going to pull the rug, They pull their jobs number, and I was like, I thought it was going to hold. I thought, with the jobs and hitting the market hard on Friday, like, well, this is the catalyst. And they just bought it right back again. So as a trader, you got to admit when you're wrong. So far, definitely wrong with that call from 5 days ago. I'm lucky because the S&P has really went nowhere. So I'm not even losing on that real, overall. I mean, if you're in the small little stocks shorting those, you're losing. But, I trade the big stuff. I think you stay bullish until a major headline drops from China. That's how I think.
Well, are you talking like you're going to go flat to the core on something like that? Like, you said you're going to dump everything.
No overnight.
No.
What are you talking about?
You said like when you see the big headline. No, you said, but when the big headline comes out.
I'll be shorting stocks left and right.
Okay.
So a trading account will all of a sudden go from long to short in a hurry.
Right. Okay.
So I'm fast enough that I believe that even if that headline comes at 7, if it comes when I'm sleeping, that's going to suck. Yeah. And that could happen too.
Yeah.
But
definitely could.
I think in the initial headline, they probably will buy the dip on anyways and give you a second chance. So there's no reason to go full bearish here until you start to see the market really start to react. I mean, if they're just going to do sanctions and do testing around, this is nothing. So, maybe I'm wrong with, the serious repercussions, but I do think they're still coming. So I'm not saying I'm going full in on investing in this market. But I think as a trader, I think you got to stay on the bull train until China knocks that train off the rails. So I'm going to wait until they actually knock it off the rails. That's
all right. Just to kind of bring some statements there, the traders are now pricing in a likelihood of a 75 basis point hike rate. That would be next month. Of course, we'll get CPI data on Wednesday, and then we'll also get the next CPI data before that Fed meeting. That's where I get a little bit concerned. That's where I've been thinking that we could get inflation to peak this Wednesday, and then what would happen if it ramped back up the following month and then right before the Fed meeting. So that's what I'm going to keep in mind. We'll see what happens here. Definitely Wall Street's bets back at it again. Yeah. Triple BY, big move. AMC's made a huge move also. I don't think we even touched that. But we're going to keep on watch all these Wall Street bet stocks.
Well, AMC is the driver. We talked it right off the bat, and this is the driver. This isn't even and obviously the iRobot takeover I thought was catalyst too, but the AMC turnaround on Friday was the absolute driver. AMC is driving the bus for all these other meme stocks right now. AMC is driving Bed Bath & Beyond is in shotgun. That's what's happening right now. You got AMC driving the bus, Bed Bath & Beyond, shotgun, and then you have all the other little memesters, the stocks, that we've talked about before that have all started to kickstart. The money, companies that don't make money, the companies that are burning cash, that's what they're hungry for right now. The companies, and there's a whole list. You just gave a few of them. Go back to a Palantir. Does Palantir get the? I don't have a position in it. Does Palantir get buy the dippers come in here, Joel?
They very well could.
I think they likely do. Yeah. I think that there's a very high likely that they come in here because this is the kind of stock that's the Reddit stock. This is a dip. They're buying dips price right now. It's the earnings suck. Like, give us the earnings on Palantir.
Yeah, let's give the earnings here. Adjusted EPS coming in at a loss of 1 cent, missing the 3 cent estimate. Sales at 473 million, beating the 471.34 million, and it gave light guidance for Q3 sales.
I think they don't care. I think that they're hitting it this morning, and I think they're probably coming to buy this dip. So I'd be a dip buyer in Palantir. I have no position in it yet, but we'll see at the open how it does. I mean, it's scary when you're buying stocks on crappy earnings and they're getting hammered to the tune of 13%, and we've seen in this environment where that stuff can continue. So it's a high risk play. Do you have a level, Joel? Maybe
yeah, I do. I mean,
give me a level.
Yeah, no, I mean, you got your pre-market low, but doesn't 9 look like a sneaky number?
Like, I don't know if it's going to get that far down. What's the pre-market low?
Yeah, first thing I was going to say, 960 is the pre-market low. That's where they're nibbling. They're just nibbling, they're not showing anything. And you get to whoosh off the open too, right? I don't know how many people have sell stops in this, but closed at 11.45. People are down $1.60. They were hoping a good earnings report. So you're going to, also a lot of buyers into the report. So they're going to get smoked. It could be one of those where you get that quick flush down to now. First things first, take out the pre-market low. And then that 9 is just sticking out at me, right? Look at these lows. You got a couple lows under 9, but I agree with you. It doesn't feel like it has the jets to get down there, but we'll see. We'll see off the open when the liquidity comes in. It's already traded 8 million, so I really shouldn't say that.
It's heavy. It's trading heavy. Let's see if it can change after the open. What I would say is when I'm trading these stocks, and and you've given me this tip, Joel, way back from when we started in 1999. At least I started in 1999. The one tip you gave me, which I still use today, was if you're trading something wild like this, or even any stock, you see it open and then it flushes a bit. If it comes back up through that opening price, that's where you strike. So we have no information on that yet. We don't know where Palantir is going to open. I'm challenging. I don't even know if it's going to open under 10. So I think buy the dippers could come in before the pre-market. But let's say you get the open. Let's say it opens at $10, flushes down to like 9.55 or 9.60, and then starts coming back up through 10 and gets up over 10. That's where stuff reverses because there's so many traders marked from that opening price. That's where they'll scramble and cover. People are saying, okay, it's going to be the gap and go down. The gap and follow through. They're going to be wrong if that thing comes back up through the opening price. So mark down where it opens, not where it opens on the primary exchange, which is obviously New York Stock Exchange. There's a big opening print. Mark that down. And then if it comes back up through that opening price, that's where I would strike. And then you use that low of the day. So if it, let's just say hypothetical, setting up a trade for you, just hypothetical. We don't know where it's going to open. It's a long time from now. Say it opens at 10. flushes to 975, back up over 10. You're buying it at 10.05 because it's coming through. And I'm stopping myself out the low of the day.
Hit the
of
low.
that day,
There, I was just going to say.
975.
Yep.
That's the whole setup. So, and then, your targets, taken obviously maybe from a 2-to-1 from your risk, or a 3-to-1, or maybe even more. But
on a day like this, yeah.
I do think it sets up well for the buy the dippers to come in here. I don't know when they're going to come in, but I mean, this is the market that they just seem to come in, and this is the kind of stock that is hot right now. So even though they've reported on a bat, they're reporting and it's getting hit, this is the kind of stock that people are hungry for right now. So I think it sets up well for buy the dip.
All right, let's continue going here. What else will they be hungry for? I'm wondering, will they be hungry for the solar stocks after, of course, the Inflation Reduction Act passing? Of course, this includes a lot of focus for solar. Solar getting a big lift. Let's look at First Solar here. First Solar is rallying more than 20% after the passage, of course, of the Inflation Reduction Act, and JPM upgrading the shares to overweight from neutral, and said that it could rally more than 20% with this pass of the climate bill.
The pile on trade here off this climate bill, and the pile on trade off these solar stocks, the momentum trade, it's fully back on. I mean, First Solar 8 days ago was $70. 107. We got 2 analysts, not just one here this morning, Mitch. We got 2 of them upgrading it this morning. I mean, the full chase is on. Panic mode from analysts, panic mode from people. I mean,
should have been watching PreMarket Prep.
Fully on right now. First Solar upgraded, you said, from the JP Morgan. Also, Guggenheim upgrading it as well here this morning. So you got the double upgrade from First Solar. Climate bill fueling these things. I mean, I sold my SunPower, I hedged it out. I should never have done that. The thing just keeps continuing to go. I did not see that continued momentum from the solar. Every time they talk about it, I mean, they keep going here. So full on FOMO, crazy town is back here in some of these stocks. These are big moves. It's ring the register opportunities for some of these things because they're such big moves. But, like a Bed Bath & Beyond this morning taken away from solar. I mean, people were saying, would you buy it here now? I'm like, it went from $4 to 11, and the company was shutting off. From the New York Post in the summer, they were turning off the air conditioning to save money. I mean,
yeah, that's where I got confused. I was like, "Where's
but it doesn't matter.
Business
fundamentals don't matter right now because you're in FOMO mode. When FOMO mode takes over, nobody's looking at fundamentals. That's why I think Palantir could catch a bid. So, anyways, that's my little rant here. But it's hard to short this stuff. It's hard to short rocket ships. I never short a rocket ship. Going back, we're teaching here a little bit this morning. Rocket ship mode, stocks going rocket ship mode. I'm not like, oh yeah, let's short that. Hell no. I'm about protecting the capital. I don't know where Bed Bath & Beyond. It'd be $13. It'd be $15. It's like that. What was that? HKD from last week. I was like, it's gonna end ugly, but I don't know where it ends. And I was like, when it was like $800, I said 1,000 could go to 2,000. I was just saying tongue in cheek. Ends up going to 2,500 that day. So you short at 800. You end up being right because the stock's back down here at 540, but you're going to be able to hold through all that 2,500. You couldn't get a locate on the thing anyways. But I mean, Coinbase, another one that's just exploded here. I mean, $101 here now. This is FOMO. We're back. FOMO's back right now.
Yeah,
so you can't argue with it.
Look how long it persisted to last time. I mean, it wasn't. It went
last
on
for a while.
Yeah, it lasted for a long time.
Yeah.
Well, I don't know who came up with the name Inflation Reduction Act. When you're throwing $500 million, $5 billion, like $1 trillion or whatever. I don't know how
you don't know you turned off fires by pouring gasoline on it, Joel?
I don't know what
I saw that meme.
Yeah. As far as these solar stocks go, no positions. Always, it's a good key to keep an eye on the pre-market high. I'm sure you'll get some acceleration through that, but that could give you just an idea. The only one I saw with a level corresponding to where it's trading is First Solar. And so that gives a little more credence. 108.18. That was your December 21 high. And that's where you're trading right now. But what's not? What's not participating? Pot. Pot's not participating. Wasn't pot part of like the whole meme?
Maybe the one that's not participating, because I'll buy it.
Yeah, I should have said.
I have a question on
pot.
Which stocks? Because I'm looking
Like
here.
CGC, Tilray.
They have news on Friday. They went down. You're right. That's the
Yeah.
next ones to go. There you go. Joel just gave it to you. That's probably the next little bubble to start going up here again. I mean, those are good candidates, Joel. Maybe we should go through candidates that could just start popping here. I'll put those pot stocks on that list. Not saying we're investing in these things, but as trades right now, I don't think you argue with Joel's analysis here. They haven't gone yet.
If anything, don't be short them.
You don't short any of this stuff right now. Danger, Will Robinson, danger.
Yeah, you also got talks, of course, of the Cannabis Administration and Opportunity Act, but I don't think that will actually pass through. That's why pot stocks were moving in the first place, but maybe these can run off of being high short interest float stocks. The one in solar that I'm going to watch, and I wanted to ask Dennis what he thought, was SEDG. Of course, they got hit on their earnings. It pulled back here. What do you think about this one setting up now as you see MPH going through the high, at least right now?
Well, the dip has already started in this thing, and I think the opportunity was the little double bottom we had from 294 to 292, and now it starts to move up here again. Can it fill the gap? I mean, they're in full buy the dip mode, so it might. I think there's easier trades out there than this. I like Joel's pot stocks as opposed to jumping in and chasing some of these solar stocks.
Okay.
But SEDG, I mean, EMPH making new all-time highs, and SEDG is going to be up here today. It's up $3 here in the pre-market. I mean, if it gets through its high of the day from the gap down day, 329, then you start thinking, it could go to 350 and fill the gap. But I think that's kind of in the middle of nowhere. I'd probably just lay off because I don't see an easy setup there.
Little different market structure here because you got the 370, put in a double top and then just got sandbagged by the earnings. So there's people looking. I mean, I'd look at, I drew this in before. I thought they'd fill the gap under 300. And I mean, it could definitely go up and fill the gap. Dennis made a good point there. 350 even would fill the gap. But I think there's people like, hey, if it gets back to 345, I'm out, one of those kind of situations after buying it above 360, 370. So
it's amazing how this market has just screwed everyone. Like when you think about like everybody crowding into oil a month and a half ago, everybody crowding, and that's the one thing that just keeps going down. I mean, you got oil down here again this morning, and don't kid yourself, it's still the catalyst. Oil hadn't had a great day last couple days. NASDAQ starts to, catch a bit here again. So
I mean, on Friday it wasn't looking too bad though. It started bouncing back. We're wondering.
But then there's sellers. Now you got the bag holder trade. Like people are stuck, and they're like, "Oh, please give me my money back," because nobody takes a loss on Wall Street because they're all idiots. So I mean, this is what we have, and now you have bag holders all over the place here. So it's hard for this stuff to just bounce back. But everybody's already been destroyed in all these meme stocks. They bag holded so much. I mean that the person who bought Bed Bath & Beyond at 25, it goes from 5 to 11. That's nice and everything, but they're still destroyed in it. So I mean, there's room to the upside because the bag holders are just so much bloody higher.
Do you know who's that? And I haven't seen it on the wires yet, but is Warren been buying the dip in Oxy and all these things? Remember?
Probably.
Yeah, but he didn't.
No, he didn't yet.
Yeah,
he hasn't yet. At least we haven't seen it come across yet.
Yeah, I mean, he could be in there nibbling, but that's one interesting thing. And Dennis, you talk about the market structure. When you have big drops like that, I pointed out last week with the crude oil. I mean, you got some thick red monthly candles there, right? I mean, you go back to this succession, of course, you had a little thing, a pandemic, where it went from 60, whatever. Well, this chart shows negative, but we know that was just an aberration, $10. I mean, as much as it was undervalued at 10, it had to be that much overvalued at, at 120. So I could see it coming home and finding a home between 60 and 80. I mean, Citigroup, man, when did they make that call? I wish I would have marked that on here. Remember that? Well, I bet you, was it this day that Citigroup did that?
I don't even remember it at all, Joel, their call. If I remembered all these analyst calls, I'd drive myself nuts.
But you got to remember
most of their calls, I trade that day and it goes in one ear and out the other because I don't want all their nonsense opinions to influence.
But Dennis, if I put it on the chart like that and I write it on the chart, then you got to remember it because we pull up crude. So
Citigroup had a year-end target of 65, so it was a good call.
Yeah.
We'll see. We'll see. I know you guys are thinking.
I know, Mitch.
can we
You're
look at the
still
spike?
bullish.
I'm
You're
still
still
there.
You're still
I'm
bullish.
still
Oil.
there, man.
I know.
I just don't see it. I mean, at least from what I know about supply and demand, it still hasn't come back. And so I think demand can come back with China if China really reopens. But I don't know.
This is one fundamental thing I'm going to teach you about crude oil. Okay, in the supply and demand, the supply figures that you get are bogus. Okay, they're not true information. What OPEC is giving you, what Russia's giving you, that's not the truth. They are pumping. They are putting out. May not be showing up in the data. Okay, but they're pumping. And there's a lot of supply out there. They are not missing out the opportunity to sell this.
Sell it at
why is there backwardation in the futures contracts? I told you I would flip when there's contango. It might even be double or triple what the supply. In demand, if we're going into recession, demand's going to crash. I don't think we're in a full-blown recession, but you can't, like those data numbers, I used to look at them where they come out on Tuesday and Wednesday. They're like, it's like reading the Wall Street Journal as opposed to listening to pre-market prep. Okay. So you got to get that out of your head. The supply, you're giving you're basing your analysis on bad information.
I'll tell my oil experts that.
Who's your oil expert? What are they saying? Bring them on the show. I'd love to talk to them.
I got you. I'll bring them on. No worries. We'll definitely talk about it.
The one thing to consider out there, and I'm going to say it again, I went the rant, is that 90% of the experts out there aren't as expert as they think they are. That includes ourselves. That includes me as well. I know. I don't talk. Why don't I talk about pumping oil and all this other stuff? I don't know anything about that. I know about trading. I know about reading charts. I know about reading, these waves of demand that go into certain sectors, relationships. I don't have any foggiest notion. I'm not an economist. I took 70 economics courses. It's all it's 25 years ago. I don't remember any of that stuff. I know the basics, but I don't jump into any of this stuff in my analysis. And you know what? I'm successful without knowing all that stuff. You don't need to, you're never going to make more money trading by simply going through spreadsheets and analyzing the balance sheets of a company and then figuring all this out. You probably are never going to make any more money. You're wasting your time. If you're trying to be a trader, a full-time trader, you need to know your technical analysis. You need to know, you need to be able to identify the catalyst, but you don't need to understand it even. You just need to be able to identify that this is a catalyst. You don't need to get into the details. And the people who are experts coming on CNBC, honestly, I'd like to see their trading records because a lot of these people don't even trade. A lot of them are just making calls. These analysts that analyze stuff are making calls. And we know from statistics that 80% of them do not beat the S&P of these analysts and these experts. I mean, there's some fantastic ones out there. Don't kid yourself. There's certain ones that move stocks, and you have to respect their opinions. It's not prudent to just ignore it because they move price, but it's not prudent to just invest because some analyst tells you that, oh yeah, this is the time to buy.
Definitely. We'll see what happens. I mean, they always say analysts maybe chasing price, but let's go to Berkshire Hathaway. Operating expenses coming in here at $9.28 billion in the second quarter, marking a 38.8% increase from a year ago. The company posted a $53 billion loss in its investment during the quarter. And of course, the Occidental Petroleum stake since March, given Berkshire a 19.4% stake in Occidental, worth about $10.9 billion.
Oh, Burke. This is one of the boring ones to trade right now. So much exciting stuff. We're back to meme stocks and excitement, and Burke's is sitting here meandering. This is not the stock that's going to participate. If we're going into full risk on mode, believe it or not, Berkshire Hathaway is more of a risk off. It's obviously a fund, but it's more of a risk off stock. So it'll participate a little bit, but it isn't going to rip roaring higher. It's not like Warren. Warren is a conservative investor, much like myself. I think you invest like Warren, but you trade like, and I don't even know if I have a good example, but, you trade what you see, you trade, you can swing around, but, Warren's good for investing, but it's not so much of a trading vehicle.
Nah, let's see. It's traded up a little bit. For you, But I don't know how many people trade this. I'm sure not many trade Brick A. But how
I don't
about
even bring it on my
96?
screen, Brick A, because I'm scared.
You don't want to.
I've accidentally hit the buy button on the thing. I never even bring it on my screen because I don't want to have the spread
huge
so wide.
position.
Never want a fat finger on Brick A. I tell you that much.
96,
that
296. There's a pair of highs in that area. If you're interested, if anybody's trading that today, keep an eye. 295.88, 295.98. Those are your highs from Wednesday and Thursday.
All right, let's go towards the next earnings stock. We'll go towards Tyson Food here. Adjusted EPS coming in at $1.94, missing the $1.97 estimate. Sales at $13.49 billion, beating the $13.24 billion estimate. What's up in the chicken?
Chicken
Eating
is not
more
popcorn.
chicken?
Chicken is not movie popcorn, so this is not the stock that they're going to be, oh, yeah, Tyson chicken. Let's make this one go. Boring stock, not on Reddit, not on Wall Street Bets, not in your social media Twitter feed, not an ape stock, not the stock that's kind of going right now. So I would much rather buy the dip in Palantir right now than I would in Tyson chicken, at least from a trading perspective.
81.80, 82. Look at all those lows down there. That's at least where you've seen some the big boys step up. So that's that'd be the first area. That's $1.16 away. Recent low of the move was in the 81 handle. Actually, it was in the 80 handle, 80.88. So 81 to 82 buy zone. If you're looking to get a big piece off Tyson chicken. Did you see Beyond Meat? We missed Beyond Meat.
Well, we talked about it a little bit on Friday, I believe, but it's again, this is the stock. These are the stocks they're buying right now. This is not, it's hard to chase this stuff now, but he got on for a trade. You're riding the wave here. There's a wave of stocks that are burning cash, crappy companies, really, for a better, lack of a better word. It's companies that are struggling. That's what they're buying right now. They're hungry for these stocks. Beyond Meat. So go back to your list from like a year ago and what was hot and what was, moving when, AMC and GME started going. Bed Bath & Beyond obviously pops on everybody's list. Why it went first. Beyond Meat was there. iRobot was there too. And that's why I still say the takeover of iRobot by Amazon. It was one. AMC is probably the real driver of the bus, but iRobot getting bought by Amazon didn't hurt because a lot of Wall Street Bets was really interested in that iRobot back in the day. So that helps too. They're Kickstarter. These guys are hungry again. They're like, it's working again.
I think it was also that HKD. You got to keep that one in mind. I think that's what started it all.
Yeah,
really, if there's one that started it all, it's that one. And then all of a sudden, everyone was like, oh, this is just going to go into everybody else's stock. And then you got.
I think you're right, Mitch. I could get on board with that being one of the catalysts.
Because we needed a ridiculous move. And that was ridiculous.
Yeah.
That was beyond ridiculous. Yeah. That HKD.
Wall Street Bets likes ridiculousness.
That probably
gets their juices flowing,
It does. And you know what? You got to pay attention. You don't have to pay attention to Wall Street Bets all the time, but when stocks are going like this, you got to pay attention to, those lists anyways. What's high short interest? You can go to that whole list. What was that site?
I got one for us to watch that it actually reports after the bell. It's Clove, CLOV.
I'm scared
I saw that one.
When they report, because they're reporting crappy earnings. So it's scary to buy and take.
Yeah. I'm just saying maybe today, maybe intraday action is something that I'll be watching for in this.
Wasn't it highshortinterest.com? Is that still a site? I haven't been there for like 6 months. Highshortinterest.com. I'm swear I'm looking. So Bed Bath & Beyond's the number one ticker there. And then I'm just looking at highshortinterest.com, doing this live with you right now. And then you got ICPT. Has that moved yet? See, that's moved. Look at that thing. 12 to 17. It's already started going. We're late to the party here.
Big Lots.
Big Lots is up there. Big Lots, you can see, it's kind of reversed there a little bit too. Decent Friday. So that's a sneaky one that could get some follow through. Upstart, we've been calling it downstart for a while, but all of a sudden, it's starting to upstart again. Nikola on the list. Nikola's like number 10 on the list, and it's been moving up higher here. Fubo.
How about Ride?
Had earnings.
How about Ride? Is on
there.
Ride. What happened to Ride? Look at Ride. It was riding. They were riding it up, and then they killed it. That pullback maybe is a little short-term trading opportunity. The workhorse is back on the list. It's been moving up the last week and a half, last 5 days. The big 5 systems, that one's not. They reported crappy earnings, so I don't know about that one. Carvana's been CVNA. That was the move on Friday. They had earnings, and they just continued. Thursday night earnings. Friday they started buying, couldn't stop it. But look at that list. there's some stocks on that list. I've got a couple of stocks on that list, but there's some stocks on that list that could potentially continue to go. I don't want to chase though. So I'm more of the laggard, like what hasn't went yet, like what Joel says. Joel says the pot stocks haven't went. I was like, well, that's interesting because I'm not risking as much. When you're buying a stock up 30% like Bed Bath and Beyond, well, there's air below you now. How do I control the risk? It was $6 2 days ago. Now it's 11. Thing pulls 10.9. It's still in takeoff mode, but I'm down 20%. So I got to be able to control the risk. So I like your idea of what hasn't gone yet.
Something definitely to keep on watch. There's a lot of names there that you guys can take a look at.
Yeah.
Let's take a look at the Kathy Nader. Kathy's coming back, man, above 50 now.
She's full of these names.
Daily is starting to get out of that bearish range there. Well, how you feeling now? I mean, it looks like Dennis got that low end, baby. I see that 40. That 40 didn't even come close.
I called it 10 minutes after it happened on May 13th. Go back to my tweet. May 12th. 10 minutes. 9:45 was
Dennis
my tweet.
with the
and I was
call
like,
there.
I think it just had a capitulatory bottom. They retested in June and it held. And I'm going to say it again. 2022 low in ARKK is
It's been holding.
Yeah, and it doesn't mean I love her strategies. It doesn't mean I'm investing along with her, but it does mean that I want to trade her stocks from the bull side right now. So they're coming in. So what does she own? She owns a lot of these same names that we've been talking about. Some of the beat up names, like I don't know if she's got Carvana, but there's a lot of names similar to that she owns. I know she's loaded right up in Teladoc. Roku's been a disaster for her, but they bought the dip in Roku too, Joel.
Yeah, they did.
They came hard for the dip in Roku. Got down to 65 days later.
Can't believe we made that gap.
That buy the dip, man. As much as sell the rip is working, that buy the dip
is
working right now.
I remember when we first saw it on that first day where it was coming back. We're like, could it make the whole gap?
Yeah.
It did.
It did. At 5 days.
And what about how big the shadows
same
are?
thing? What about Walmart?
Okay,
made the gap too.
Now Walmart's not the stock though.
No, it's not
down here again. It's not this.
Walmart,
the money burning machine that they want right. They want the money burning machines, Joel.
They don't want
this still money making
sell
machine.
Stuff. I mean, come on. Positive earnings. Get that off my radar.
Yeah, who wants positive earnings? We want disaster earnings, and we buy the dip on them. We make money. A little bit of joking there, but somewhat serious too right now.
All right, let's go ahead. Let's get into everybody's favorite part of Mondays, which is, of course, Market Structure Monday. All right, let's bring on Tim Quast. We're
Tim.
back, baby. Let's get into it. How you doing, Tim?
What do you see with these meme stocks? We've been talking meme stocks all morning. It's been a while. Like AMC and GME and Bed Bath and Beyond. Jump into a few of these names.
And AMTD, right?
Oh,
Did you see AMTD? Right. Briefly,
to the collapse.
400 billion in market cap, and then back to
the other one, the one that owned the HKD. Was it HKD?
Right?
Yeah, HKD. Yeah, it became the 11th.
Oh, is that what it was? Yeah.
It was HKD, and AMTD owned the majority stake in HKD, but it didn't even have close to the market cap of that. The inefficiencies there just abounding. But did you play that HKD, or you don't touch that kind of stuff?
I do.
That's above everybody's pay grade there. That's gambling.
It is. Now I've traded meme stocks, but always with market structure edge. I mean, I will always look at the supply demand balance before I do something like that. But you can. I mean, you could.
Do you have HKD in there? Do you have that stock even in there? It's so new. It's
probably not. Let me just take a look.
It's been 1, 2. It's only been out in less than
preferably not.
Right. Exactly. We don't want to encourage that behavior. No, I don't see it.
Okay.
So what did you conclude about these meme stocks? By the way, you can go back and look historically and see where those things are occurring by looking at short volume in the market.
Well, let's look at some of that.
But
jump in and let's see some of that, because we were trying to look right now. So this morning before you came on the show, we've been talking about AMC being the leader driving the bus, Bed Bath and Beyond driving the bus here now. We're starting to see some of these meme stocks really pick it up, and we're trying to look which ones haven't gone yet. And what Joel was just, maybe we should have started here. Joel started with pot stocks. He's like, well, they haven't gone yet. Tilray hasn't gone anywhere. CGC hasn't gone anywhere. ACB, Aurora Cannabis, which is the dog of dogs, hasn't gone anywhere. Do these dogs start barking? Tim, tell us.
Well, so again, I look at supply and demand. So for those who have never been to a Market Structure Monday discussion, welcome. So when I say supply and demand, here is a cannabis portfolio, and so the top chart is demand, and it's an algorithm that normalizes the buying and selling by investors and traders to a 10-point scale. And the more time that stocks spend above 5, the better they tend to do. The bottom chart is short volume, which is the supply chain of the market. So the creation or the borrowing of stock is key to the way that the market functions. So if I look at cannabis stocks here, interestingly, they actually have divergence between supply and demand. So supply is constrained. It's below the trend line there. This is kind of hard to see. I'll zoom it in a little bit. And demand is rising. So then if we go look at this and look at the components, and I haven't done this, so we're going to see this at the same time. If I look for Tilray right in the middle here, it's 5.4, which is above the 5 axis, and it's rising, and the supply chain is down. So from a pure supply demand perspective, you would say that Tilray has a probability of rising. Look at that divergence right there. So here's price, just closing price. Mm-hmm. Here is the demand algorithm, and here is supply. So the reason that Tilray has risen recently is because of massive short covering. There you go. Now, will it continue to rise? I can't say. This was a pretty good demand side of the equation. It's the reason that the price has done pretty well. Stocks that are below 5, not my favorite. I rarely trade those because the standard deviation is so huge.
They're wild.
That the probability that you produce returns is challenged. But you can always look at supply and demand, and you can look at the whole group. If I were to look at the best stock in this group, it's difficult to say. But I look at market cap. So if we look at IIPR, that's interesting. Of course, it's in the real estate group.
That's a pot. Is that pot
They do
stock?
lending. They do lending for real estate for cannabis company.
There you go.
Wow, that's been killed too.
I know
everything's been killed.
It's true.
It's true. It's not the group that I would trade, everybody.
Yeah.
But you can look. You can know when to trade them and when not to trade them by looking at supply and demand. That will always be true, and it doesn't matter what the fundamentals are. It doesn't matter whether they're in or out of the news. This will always be true.
Well, one question that I think everybody has is, if this is true, what about the broad market here above 7 here? Now what do we do?
So thank you, Mitch. I appreciate you asking that question. So what we mean by above 7. So here's the broad market. This is the way we think about supply and demand across the whole market. And this is for the stocks comprising the S&P 500. So we use here for price, which is this part, the gray part of the graph, is SPY. So it's the State Street S&P 500 ETF. And I'm defaulting to a 90-day view. Here is demand, same algorithm. The whole market trades between 4 and 6 most times. So once it goes above the red line, stocks tend to fall. When it goes below the green line, stocks tend to rise. So what your point here, Mitch, is that here's the amount of time that the market has spent above 7.0, which is it's unusual. It is very unusual, as it is very unusual for the market to drop all the way below 2 like it did in June. So we had a clear market bottom, and it's, if I expand out, I'm going to go out to 3 years because there are 2 core conclusions about this, I think, that help us understand what may or may not happen in the broad market. So here's that huge bottom. Can you see? I don't know if you can see this.
Extreme low there.
Right. So every time that occurs, the market bottoms. Here is the pandemic bottom. And this is the most extreme since then. So what was the probability in June that the market would rise? Well, almost 100%. Now what is it? Well, when the market is at extreme tops like this, I'm not saying that it is, but it could be the end of this. It's so unusual.
You've missed the train.
I think so. I think so. The probability that the market continues to do what it has done after such extreme conditions like this is limited. This was a clear bottom. This is a clear top. Could it be the end of this very strong momentum market that we had? I don't know. None of us know. But mathematically, I would look at that and say, well, there's a very high probability. There's a very high probability that this great run that the market has had, which was great to trade, I was up 18% in a week during July. So it was a great time to trade things. But will that continue? Probably not. Probably not. That's what the math says.
And I think I agree with that. Like we've been saying for the last few days, I feel like we're lying in the tooth. I feel like there's an eventual China rug pull, and I've tried to get bearish, but then you start seeing what's happening here with these meme stocks starting to take off again. You're like, maybe I'm wrong. It feels like it's full risk on still. So I'm like, as a trader, I got to be able to swing, and I obviously admit when I'm wrong as well. But it's just been a difficult couple of days, a few days here, if you're trying to be short, especially in some of these beaten down names, because those things are going up.
No question. And that's what happens in any period of extreme enthusiasm. And it can take years or it can take a month, as it did this time around. Anytime that you begin to see behaviors that probably don't reflect a good grasp of reality, it's probably a bubble. And that could be in a very short period of time. It could be over a longer period of time. So here are there are 17 stocks that I put in a meme stock portfolio. And Avis has been unbelievable. It's one of the stocks that we have consistently found in what we call our momentum portfolio. And look at this. You could say from mid-July, from options expirations in July, all the way to present, Avis CAR has been a tremendous stock to trade. This divergence, this falling supply and rising demand is the classic thing that people who use edge look for. That produces returns. But it also tells us that this period could end with August options expirations. I'm not saying it will, but that's about a week and a half away. So is that the end of the run? Is it from one options expirations period to the next one?
They turn. Maybe. You're right. We see that again and again. They turn on these
over and over
expirations. Like it's such an important day. There's so much money jockeying on that day, and there's so much volume on those days. And that's where you get these extreme moves sometimes too. They're often turning points.
Right, and they're underappreciated. Most market commentators do not understand how much money is tied to the options market, and it gets short shrift. It's a very important thing to watch.
Talking about the expirations, how about the June expiration, right?
Exactly.
That's the quad witch, right? That was the actually, I don't know what the third Friday was looking at my calendar here, but Tim, before we let you go, I want to just talk about the importance of trade size and volume, and that a lot of times when I'm looking for when I look at stocks like HKD and AMTD, you can tell where people are getting in, like the volume pumps up, and then it has like the good day afterwards, but it's kind of on less volume. And then you kind of have that indecision day, right? Where it just kind of hangs out, doesn't do anything, but the volume really comes down. And then when I look at that, I'm like, what's it, the bag holders are going to learn pretty soon. They're going to be bag holders. Talk about the importance of trade size.
Okay, we'll do. And here, by the way, is the June expiration. This was June expirations. You can see these little green rectangles or squares. That is expirations. We put it on the broad sentiment chart in Edge, so you will always know. And what happened there? Well, that was just about the bottom of the market. You can see this is the supply side. We had extreme levels of short volume, and I won't forget your question about trade size. And look what happened. Okay. It plunged and demand rose, and that was the bottom. It was right at quad witching. Did that have something to do with it? Well, nobody mentioned it, but I think so. I think that was the point where folks thought, okay, well, let's reset risk hedges and let's leverage into equities again. Now, will that end? I don't know. The supply side is still very light compared to what the trend has been. That tends to give the market support. So let's go to trade size. It's one of the core things that we focus on. So here's what I mean by this. Not, people may mean other things than I do about this, but one of the core things that we measure is the amount of money per trade. It's very important. So I was trying to buy Top Build on Friday. So here, these are the two.
What's the symbol on that? I don't even know what the symbol is on that.
It's BLD.
BLD.
I was going to go TBLD.
Right. So here's why I bought it. So you see this volatility figure here? This is the spread between the average intraday high and low in BLD, and it was down 5%. Now, it doesn't mean that I will make money on it, but I bought it because it went down that much. And if I look at the supply demand equation at 10 and short volume on the way down and below 50%, and here's the trade size. See this? It trades $6,600 at a time. And I could not fill a trade for more than that. I tried over and over and over. I put in marketable limited orders, and it's got a big spread, and my price never was met. When I cut the trade size to about 35 shares, all of a sudden my trade started to fill. And I bought quite a bit of it. Look, it may not work. But that's the importance of understanding how the market works. If you try to buy more than 100 shares of this stock, you will not get a good price, and you will have a very hard time filling the trade. But if I put in a marketable limit order that is between the best bid and offer for that size, about $6,500 worth, I'm going to get filled, and I will get the best price. Well, those are very important things to know as a trader. And who talks about those things? You do, Dennis. Joel, you talk about these things too. But most people don't know this. And here's why I bought it. See this? Demand at 10, supply falling, price down 5%. Is there a chance that it goes up 2, 3, 4% today? Well, yeah, there is that chance. And that's all I'm after. So that's how I trade with Market Structure Edge. It's I'm going to look at the demand side, the supply side, the size, how much money can I execute in a trade, and what is the intraday volatility. You put all of these things together, and it improves the probability that you can execute profitable trades. And you don't have to worry about whether Congress is blowing the public fisc like it did over the weekend, or anything else that's going on. Taiwan, Ukraine, the state of the economy, whether the bottom's in. You don't have to worry about any of those things. All you have to know are those things. How much does the price change? What's the trade size? And what's the supply-demand balance? Then you want to look at the broad equation. Where's the market? Well, at 7.0, the probability that the market goes up another 10% is almost zero. It's not quite, but it's almost zero. That's what I do every day. I look at these conditions.
I mean, your systems are all built on probabilities, which is what the best systems are all built on. And I mean, we have Rob Friesen, he talks stock odds with Joel, and and obviously I've got my own systems, which I probably don't have as many numbers to, but it's still all probabilities. I mean, that's the correct way to approach the markets to try to have long-term success in this business, is to come in with probabilities, because you can't come in like, oh, I'm going to get rich on this and I'm going to buy this. You can't come with that mindset. You got to come in, okay, what's the probabilities? Is this run continue? Am I late to the party? Analyzing from those perspectives and analyzing the risk reward. And that's what you're looking at the most probably, Tim, is, the risk reward and controlling that risk. And then that gives you the edge. Exactly
right. I could look at, here, and another great case in point is Crocs, which is a Boulder, Colorado company. Maker of the footwear favored by chefs in the kitchen. But it's to your point, risk and reward. So I owned it. I sold it on Friday because I don't like risk. I had a nice return, and could I hold it over the weekend? Well, yeah, but I can buy it again today. So that's how I think about it all the time. I'm constantly thinking about what is my risk and what is my reward. That's a great way to put it, Dennis. And the people who chase meme stocks are not rich people. The rich people are the people who pay a lot of attention to risk and reward. And that's what you should do as a trader. Be very aware of those things.
Tim, I like what you just said there too, and something we don't say a lot on the show, but he's like, I'm out and I can rebuy it though today. You didn't like the risk over the weekend? Well, that's okay. Don't hold over the weekend, but you can rebuy here today on those same stocks, and maybe it moves a little bit against you, but at the same time, I mean, if you're worried about overnight risk, you can be a full-on day trader. And if you're worried about a China headline hitting overnight, doesn't mean you can't be long all day and then get to cash. And then the headline didn't come. Okay, it's go time here again. So exactly. I mean, there is ways to minimize that risk as well. So great point.
Yep, you can always buy something tomorrow, but you can't get back what is gone. And so I always think about that on Fridays. What is my willingness to stay in a position over the weekend when I can't control the outcome over the weekend? Well, I tend to not have a lot of exposure over weekends for that reason. It's not always the case. I mean, if all the supply demand curves look like this, the broad market looks like that, I can look across the whole dashboard, all the sectors look like that, then I'm not going to be concerned. But when it's 7 days, it's over 7.0, the likelihood that I'm going to leave all of my money exposed to the market over the weekend is zero. Not going to do it.
Definitely, Nell. I would definitely tell everyone to go ahead and check out Market Structure Edge. You guys can check it, and you don't even need a credit card. So go ahead. If you wanted to see the data that we were just explaining, go ahead and check it out yourself. All right. Thank you, Tim. Like always, we'll have you back on.
Have a good week, guys. Good to see you.
All right, let's go ahead. Let's dive on into a little bit of some ticker time. So go ahead and drop in some tickers if you guys got some. We got about 3 minutes here for
show me those meme stock tickers, because I don't trade these things that much, and I'm just looking. And obviously, the one thing, if you're trading these things, don't get caught holding the bag. There will be an eventual rug pull and Bed Bath & Beyond, AMC. Those are your leaders. You start seeing AMC and Bed Bath & Beyond, the rug pull happens there, then you start bailing on these other stocks too. And that could happen right after the open. So keep AMC. If you're trading any of these other memester stocks, keep AMC, keep Bed Bath & Beyond on your screen. If they get the gap and go on, these other stocks are going to pick up. Again, you see how I'm looking at it? It's relationships. I'm not looking at it like, this is, and analyze the fundamentals. I'm just looking at, I've got a relationship with AMC and Bed Bath & Beyond driving the bus right now, and a bunch of Wall Street bet stocks, and the rest of the stocks may play catch up here. And there's some that maybe, like Joel's saying, the pot stocks haven't gone yet. Maybe that's the potential to go yet. So give us some few of those stickers.
All right. Well, I'll see what I see in the chat, and I'm gonna kind of mention it there. Someone wanted to mention the Rev, maybe Revlon.
That's already kind of had its move, but you know what? If you wanted to be in it, Joel, I can see triple bottom, 720, 735, bankrupt companies. Those are sexy all of a sudden right now, Joel, or companies that are potentially going bankrupt. I mean, it's not something I want to invest in. Could you trade it? You could. I don't know if I'm chasing it though. 720. I'd stop myself up below 7.
I'd use 9 as a big number. Just
breaks that through there.
Yeah. If you want to buy it on strength, just look at that. Couple highs. The highs, not quite the high from last week, but keep an eye on 9. Couple highs just below that one.
BGFV, Big 5.
It's been beat up, and you know what? Man, it's just like, it's such a bad report, and they're not buying outdoor stuff right now. They're not buying toys. They're not doing anything. The one thing you have great support down here is like 1039, the low, then 1060. You're 1102, the close, 1111 trade this morning. I think I'd stop myself out at those lows. You could try it. You'd stop yourself out like at 1030. So you're getting a little bit of risk there, 7% risk. It could turn around, but it doesn't have the momentum going with it right now. But it has the potential.
It looks like the big boys have interest in the 10 handle. The last 3 monthly lows, 1039 to 1095. So if you want to risk a buck at 11, stop yourself out at 10. But that's where I found support. Also over the last 3 months, I don't think you can look for any major upside here until you clear 13.25. 3 monthly highs right there. It's been in the trading range, coming near the lower end of the trading range.
One that I would call out, Wish and maybe Neg, NEGG.
NEGG. I've never traded this one. You got a new one for me here.
Wish.
What Wish is? Where is that thing?
Holy. When you wish upon a star, man.
This was a wishing disaster.
When you wish upon a star.
Yeah, I mean, long term, this thing is probably.
I mean, if there's
stock to
anything
be
that
in.
wants to go, though, maybe. I mean,
Yeah,
that's as
you
bad
know
as
what?
it
The
gets.
dogs are barking. There's nothing more doggy than Wish. And what was
So
the other
bad
one?
as it gets.
BBIG. Holy mackerel. Remember that BBIG? And I said something bad about it at 5 when it was $5 or $6 on the show. And I said, I think it's going back
we
down.
don't talk about
I had
that
like
one.
25 people reach out to me that I was an idiot. And I'm going to, and I'm going to miss this big boat now. It's literally 70 cents.
What about
I ended up
SOS?
being right on that one. So I don't know. You can really doggy with some of these things.
Yeah.
Maybe too doggy even for me. SOS. I've traded this one, but a long time. I think it fits the bill. Beat up, starting to turn up 4% here this morning. These all fit the bill for stocks that could have a little lift here. But again, I'm gonna say you've got to keep AMC and GME and Bed Bath Beyond on your screen, because if you get the rug pull there, you got to be quick to get out of these things. They're all hot potatoes, and they're all probably going lower 6 months from now. But right now, they're they've gotten starting to pick up some steam and they're getting hot again. But they're hot potatoes.
The information on this
trades.
show is for informational purposes only.
Hey, say that disclaimer,
please consult your
please.
own financial advisor before making any investment, trading, breakfast, lunch, or dinner snack decisions. Please.
Yeah, that's true.
That's
all
all I have
right.
to
That's
say.
true. Joel's scared of all these things, and I am too. But they're fun to trade right now. Some of them are fun to trade.
Definitely. Now, I would like to take a second before you give your numbers, Joel. Let's play. Definitely want to go ahead and get into, of course, we will be, of course, doing the swing trading challenge. That's going to be intro to swing trading on August 18th. I'm just trying to pull it up here for you guys. Want to go ahead and preview this. Joel, what else is going to be talked about on that intro to swing trading?
But before we leave, what just happened with NVIDIA?
Breaking news time.
Pull. We have a rug pull already.
We're already getting the start.
Announces preliminary
That's why the
results.
SPOOs are tanking
NVIDIA,
too.
Yeah,
Good call.
NVIDIA just hammered.
What are they?
This just happened right at 9 a.m. So 2 minutes ago.
What happened?
They came out. They lowered guidance, I think, here right now. CNBC hasn't even picked it up yet. They're still talking. This is serious. This is a serious rug pull. So everything we just had on the show, ignore it all.
Yeah,
seriously. Seriously. You don't want to see a rug pull from
here.
NVIDIA here right now. This is not good news. So
yeah, we got a pre-announcement here.
Even this could bring the market even red here. So
I got you guys right here.
All right, I'm
Joel,
missing time here. I gotta let it go.
That's a rug pull, not from China, but NVIDIA is another bad one to have a rug pull on.
All right, so NVIDIA announcing preliminary financial second quarter results here. Second quarter revenue at 6.7 billion versus the outlook of 8.10 billion. Huge miss there on revenue. Shortfalls on outlook, primarily driven by weaker gaming revenue. Of course, we kind of knew that one, but didn't expect it down this much. Pre-announcements definitely getting hit hard. Second quarter results are expected to include approximately 1.32 billion of charges for inventory and related reserves. And looks like the May revenue outlook of 8.1 billion being the focus here, missing there by about 19%. We'll see what happens there in NVIDIA.
Got to be careful now. It just changes everything. I mean, this is, a serious rug pull. They haven't even mentioned on CNBC. So what happens is the whole world gets the news, and CNBC is always late to the party. So you get a flush, and then sometimes you get a little relief pop, and then CNBC, which everybody watches, mentions it. Breaking news 10 minutes later, and they get the subsequent flush.
You see, all we needed, Dennis, was you to get bullish. That's it.
I've been bearish for a week. I try to get bullish for 1 hour, and this is what happens. They pull it out from
This is how easy it happens,
So
man.
again, careful here, careful. So I'll just say, obviously, there's, this is changes some things, changes some circumstances, but let's see what they do. More information. Are they going to buy the dip in NVIDIA? Are they going to ignore this? They haven't even mentioned it on CNBC here yet, so it's coming. I'd be cautious here, though. Now, again, this is why you have to be a trader. You have to be able to move around. New information comes in. This NVIDIA changes me from full-on risk off to or full-on trying to get a little bit more risk on to okay, no. Again, this is, one of the leaders, and, you can't have the leaders lagging.
Yeah, I think the big thing now to watch is that we've been going up all pre-market, and it feels like we might have gotten the peak, at least for the day, at least for me. I think we just
hard to make that call.
Yeah,
but
we'll see.
This is bad. It's down $14 here right now. Like I said, they haven't even mentioned on CNBC yet, so the whole world doesn't even know yet. We're giving it to you here. But the majority of traders are watching CNBC. La la la. Oh, it's a nice day in the market. La 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 la. Until you get the breaking news and videos lowering.
Breaking news. All right. Well, definitely. Now, one thing I definitely want you guys to check out is the swing trading with pre-market prep introduction, August 18th. I also got a trailer for you guys to check on out. Dennis, have a good trading day. We'll definitely see you tomorrow.
Okay.
And I know that a lot of people are going to keep up with your Twitter today, like always. Triple D Trader.
It's a rug pull. We got a rug pull, not from China, from NVIDIA. The NVIDIA rug pull.
All right. We'll see what happens there.
But Kramer's still talking. He doesn't stop talking. He's like me. Okay.
Yeah, he takes over. All right. Well, I will give you guys a little bit of some preview of what you guys can see at that swing trading event. I'm going to go ahead and play the trailer here. Get on out of here and get you guys over to live trading. Like always, I want you guys to come on with us. Lord Ryan, of course, myself, Zunaid. We'll keep trading. We've been really hot lately. Let's keep it hot like we've been doing. And we've been trading everything from meme stock movers to some higher priced names. Last week we did some swing trading. So if you guys want to come on over, come check it on out. And if you want to check out some more swing trading, go ahead and, of course, check out the introduction to swing trading with pre-market prep. Go to premarketprep.com and you guys can enter the pre-MP P10 for a 10% discount.
Are you tired of being sucked into momentum stocks just as the momentum turns the other way? Do you not have a big enough account or tired of the complexity for options trading? Well, join Pre-Market Prep's introduction to swing trading. This is going to get me fired up. Learn event-driven trading, seasonality, sympathy trading, and you can stay on top with optimal hedging strategies. So welcome back, Spencer Israel, from his market hiatus, and learn along with him as he hones his trading and investing skills. August 18th, 12 p.m. Eastern to 3 p.m. Eastern. You think you learn a lot every day listening to Pre-Market Prep? Learn how to become an investor that can survive the swings, ups and downs in this volatile environment.
We'll see you guys there. Don't miss it. Premarketprep.com. Now it's time for some live trading action.